This episode was produced using AI-generated voices and scripting. Okay, here's what I want to know. We've been hearing about enterprise AI for, what, 2 years now? And the story is always the same. Big company buys licenses, runs a pilot, executives love the demo, but the money never shows up in the actual results. So now Microsoft says Copilot hit its internal sales targets for the March quarter, and I'm supposed to believe the vibes have changed?
Here's the thing. You're right to be skeptical, but you're skeptical for the wrong reason. The story isn't that Copilot hit its targets. The story is that Microsoft set the targets in the first place, and they were willing to confirm it publicly. That's new. That's a company that was previously very careful to talk about Copilot in terms of adoption, seat counts, engagement, all the soft stuff. Now they're talking about revenue targets being met. That's a different posture entirely.
But isn't that just PR spin? They set the bar, they clear the bar, they announce it. We don't know where the bar was.
Of course we don't. And that's a legitimate criticism. But think about the alternative. If they missed, they would have said nothing. The fact that Judson Alhoff, the commercial CEO, went out of his way to confirm it tells you something about the internal confidence. You don't volunteer that information unless the trajectory underneath it is strong enough that you're okay being held to it going forward.
Okay, but here's my pushback. Every big tech company right now is incentivized to tell a good AI story. The stock prices are built on it. The capex is insane. If Microsoft comes out and says, yeah, Copilot's doing fine, isn't that just the cost of maintaining the narrative?
Partly. Sure. But here's my first contrarian take, and I think this one matters. The most important thing about this announcement isn't what it says about AI. It's what it says about the sales motion. The real signal is that enterprise AI is moving from project-based buying to procurement-based buying. That's a massive shift.
Break that down. What's the difference?
So project-based buying is when a CTO or an innovation team gets a budget, runs a proof of concept, evaluates the results. It's experimental. It lives in a sandbox. Procurement-based buying is when the CFO signs off, it goes into the IT budget as a line item, and it renews automatically. One is a science experiment. The other is software. And what Microsoft is signaling, whether they say it this way or not, is that Copilot is becoming software.
That's the part nobody talks about.
Right. Everyone's focused on, did AI meet the hype? Or are people actually using it? Those are consumer brain questions. Enterprise doesn't care about hype. Enterprise cares about whether the thing is embedded deeply enough that ripping it out is more painful than renewing. And that's where the recurring revenue piece actually matters.
So you're saying stickiness is more important than satisfaction?
In enterprise software, always has been. Think about it. How many people actually love their CRM? How many people wake up excited to use SAP? Nobody. But those products print money because they're woven into the workflow so deeply that switching costs are enormous. Copilot's doing the same thing, just faster.
And I want the listener to really sit with that for a second, because if you're thinking about this from a does AI actually work perspective, you might be asking the wrong question. The question enterprise buyers are asking is this thing embedded enough that I can't get rid of it? And that's a very different lens.
Exactly. And here's where it gets interesting. Microsoft has a structural advantage here that I think the market still underprices. They already own the workflow. They own Outlook, Teams, Word, Excel, the whole Microsoft 365 stack. Copilot doesn't need to win a new workflow. It just needs to make the existing one slightly better and slightly more dependent on itself.
Okay, but let me push on this. Because I've talked to people at companies that rolled out Copilot, and the reviews are, let's call them mixed. A lot of it's cool for summarizing meetings, and it's okay for first drafts, but not a lot of this changed how we operate. If the product is just fine, can it really sustain $30 a seat per month?
That's the $30 question, literally. And this is my second contrarian take. I actually think the product being just fine is enough. More than enough. People forget how low the bar is in enterprise software. You don't need to be transformative. You need to be useful enough that the person who approved the budget doesn't look stupid. That's it. That's the bar.
That's so depressing, but also probably true.
It's completely true. And look, I've sat in those meetings. The decision maker bought Copilot licenses because their CEO told them to do something with AI. Now they need to justify it. And if a handful of teams can say, yeah, Saves me 20 minutes a day on email. That's enough. The ROI case gets built backwards from the purchase decision. It almost always does in enterprise.
Wait, seriously? You're saying companies buy the thing and then figure out if it was worth it after?
Not always, but way more than the industry admits, especially with a technology like AI where there's massive top down pressure from boards and CEOs to not be left behind. The fear of missing out in the C suite is a more powerful buying signal than any ROI calculator.
Okay, so let me play this out. If the sales motion is working and the stickiness is building, what does this mean for the actual competitive landscape? Because Google's got Gemini and Workspace, Salesforce has Einstein, there's a bunch of startups. Are they all going to hit the same inflection?
No, and this is where I think the narrative really goes wrong. The mainstream take is rising tide lifts all boats. If enterprise AI is monetizing, everyone wins. That's backwards. What's actually happening is consolidation. Microsoft hitting these targets means the default choice is working. When the default works, nobody shops around.
Meaning the startups are in trouble?
Some of them, absolutely. Think about it from the buyer's perspective. If I'm a mid-market company and I already pay for Microsoft 365, and I can add Copilot for 30 bucks a seat, why would I also buy a separate AI writing tool, a separate AI meeting summarizer, a separate AI analytics product? The bundling effect is brutal for point solutions.
Come on. That's the Microsoft playbook from the 90s. Bundle, embed, suffocate.
It is, and people keep acting surprised when they run it again. The playbook works because procurement departments love simplicity. One vendor, one contract, one throat to choke. The startups that survive are going to be the ones that do something Copilot genuinely can't. Deep vertical workflows, regulated industries, things where a horizontal tool doesn't cut it. But the broad-based AI assistant for knowledge worker space, Microsoft's going to own that, and this quarter's results are early proof.
Let's talk about the money for a second, though, because hitting internal sales targets doesn't tell us about margins. And I've seen estimates that the cost of running these AI inference workloads is enormous. Is Microsoft actually making money on Copilot, or are they subsidizing growth?
Ugh, this is the question I wish analysts would push harder on. And the honest answer is, we don't know with precision. Microsoft doesn't break out Copilot margins separately. What we do know is that inference costs are coming down fast, like really fast. Every quarter, the cost of running a GPT-4 class model drops significantly. So even if Copilot was margin negative a year ago, the economics improve with every hardware refresh and every model optimization.
So it's a bet on the cost curve.
It's always been a bet on the cost curve. That's what the entire CapEx spend is about. Microsoft, Google, Amazon, they're all spending insane amounts on data centers and chips right now. And the bet is that inference costs will fall fast enough that these AI products become high margin recurring revenue within a few years. If the cost curve flattens out, they're in real trouble. But so far, it's not flattening.
And I want you listening to think about this, because the CapEx numbers are genuinely staggering. Microsoft alone is spending north of $50 billion this fiscal year on capital expenditures, mostly AI related. If Copilot and related products don't convert to high margin recurring revenue, that's a massive write down waiting to happen.
That's the bear case. And it's not crazy. But here's what the bears miss. Even if Copilot specifically underperforms, the infrastructure Microsoft is building supports Azure AI services, which are a separate and arguably bigger revenue opportunity. The CapEx isn't just for Copilot, it's for the whole AI cloud business. Copilot is almost like a loss leader that proves out the platform.
Okay, but loss leaders only work if the thing you're leading people into is actually profitable. Is Azure AI profitable?
Azure's overall margin has been expanding, and AI is a growing share of that. Satya Nadella has said AI services are on a multi-billion-dollar annual run rate within Azure. But again, margins on AI workloads specifically, they don't disclose that. It's a trust US situation.
I love how the biggest story in enterprise tech right now is basically trust us, the money's coming.
Welcome to every platform shift in the history of tech. The cloud was the same way. Mobile was the same way. Spend a fortune up front, you lose money for years, and then one day the margins kick in and it prints cash forever. Question is always timing.
All right, let me bring up something else that's bugging me. This notion of pilots converting to recurring revenue, that phrase sounds great. But isn't there a ceiling? Like, How many seats can Copilot realistically sell into? Not every knowledge worker needs an AI Copilot. Some of them barely use the software they already have.
Huge point. And this is where I think the total addressable market estimates are wildly optimistic. Microsoft 365 has something like 400 million paid seats. The bull case says Copilot could eventually be added to most of them. That's insane. Most organizations aren't going to give every employee a $30 a month AI add-on. You'll see it concentrated in high-value roles: sales, consulting, legal, executive assistants, the people where time savings translate to real dollars.
So the addressable market is maybe what, 20% of those seats? 50 million? 100 million?
Something in that range, probably. But even 100 million seats at $30 a month is 36 billion a year in recurring revenue. For context, that would be roughly the size of LinkedIn's entire business. It's not nothing, but it's not AI transforms every desk in every company either.
And here's another thing I want the listener to grapple with. The companies that are buying Copilot right now, the early adopters, these are self-selecting. They're the ones most likely to get value from it. The question is, what happens when you get past the enthusiasts and into the bulk of the market? The companies that are slower, less tech-savvy, tighter budgets. Does the conversion rate hold?
Probably not at the same rate. And that's a classic S-curve problem. Early adoption looks exponential, then it hits a wall. Microsoft knows this, which is why they're already building Copilot into cheaper tiers and launching lighter versions. They'll do what they always do: segment the product, offer a basic version in the core subscription, charge more for the premium features.
So eventually, Copilot becomes like what spell check was. It's just part of Word.
That's exactly the long game. And when that happens, the $30 premium goes away for the basic stuff, but Microsoft will have raised the floor price of Microsoft 365 by $5 or $10 a seat. Across hundreds of millions of seats, that's worth more than Copilot as a standalone product ever would be.
That's sneaky. That's really sneaky.
It's not sneaky, it's rational pricing. Ugh. Everyone acts like these companies are running some elaborate scheme. They're running a business. They built a feature. It costs money to run. They're going to fold it into the base price over time. This is what happened with Exchange Online, with Teams, with everything Microsoft has ever bundled.
Okay, final angle I want to hit. What does this mean for the broader AI narrative? Because there's been a lot of anxiety, investors, VCs, pundits, about whether AI can actually generate real business returns or if this is all just a hype bubble. Does Microsoft hitting one quarter sales targets change that conversations?
It changes the conversation, but it doesn't end the debate. One quarter is one quarter. What matters is the trend. If Microsoft hits again next quarter and the quarter after that, and you start seeing similar signals from Google Workspace with Gemini and from Salesforce, then you've got a real pattern. Right now, this is one data point, an important one, but still.
But it is the first concrete one. That matters, right?
It matters a lot because the AI skeptics, and I'm sympathetic to many of them, their strongest argument has been show me the money, not the investment, the return. And for the first time, a major company is saying, here's the money, the recurring kind. Now we can debate whether the targets were aggressive enough, whether the margins are real, all of that. But the direction of travel is clear.
So where does that leave the hype versus reality debate?
Honestly, I think the answer is that both things are true at the same time, and people can't handle that. AI is overhyped in terms of what it can do right now. The products are good, not magical. The productivity gains are real but modest. But AI is also underestimated in terms of the business model dynamics. Because once you're in the enterprise software flywheel, embedded, sticky, renewing, the product doesn't need to be magical. It just needs to be default.
The product doesn't need to be magical. It just needs to be default. That might be the line of the episode.
And I think that's what makes people uncomfortable. We want the AI story to be either this changes everything or this is all a scam. The reality is it's neither. It's enterprise software. It's boring. It's iterative. And it's going to make a lot of money not because it transforms the world, but because it gets embedded in the workflows of millions of workers who barely notice it's there.
The most expensive spell check in history.
The most expensive spell check in history. And the most profitable one.
I hate that you're probably right about this, Because the sexy version of the story is AI revolutionizing work, and the real version is Microsoft adding another line item to the enterprise contract. That's that's just enterprise software being enterprise software.
And that's why it works. Revolutions are exciting but unstable. Line items on enterprise contracts are boring but durable. If you're an investor, which one do you actually want?
All right, before we wrap, give me your prediction. 12 months from now, where is Copilot?
12 months from now, Copilot is generating 10 to 15 billion in annualized revenue. Microsoft will have started folding basic Copilot features into the standard Microsoft 365 plans while pushing the premium version further upmarket with agent capabilities. Things that take actions, not just write summaries. The price goes up for power users, down for everyone else. And the narrative shifts from, is AI working, to which AI vendor owns the enterprise relationship. Spoiler, it's the one that already owned it before.
And the startups?
The horizontal ones are in consolidation mode. Half of them get acquired, a quarter of them die, and the rest pivot to vertical applications. The winner-take-most dynamic in enterprise AI is going to look a lot like what happened in cloud. Two or three platforms win, and everyone else builds on top of them.
All right, so the headline is Copilot hit its targets, but the real story is that enterprise AI just became enterprise software. And if history is any guide, that's how you build a business that lasts decades, not with magic, with procurement.
With procurement, the most powerful force in technology. Not innovation, not disruption. Procurement.
On that deeply uninspiring note, that's the show. Thanks for listening, everyone. We'll see you next time.